Hello.
Hey, what's happening?
Just a delayed reaction there.
Well,
It's good to see your face again.
it's good to be seen, as always. I'll take being seen than versus not being seen.
How about being seen and heard? Which would you prefer? Being seen or heard? Or both? Or one or the other?
Never really thought about that.
Well, there
Maybe,
you go.
maybe a little bit of both. As long as I say something inspiring or profound or something of that sort.
Do you
Hmm.
remember, Scott, do you remember Abraham Lincoln's famous quote?
You probably had more than one, but
Right.
which one are you referring to?
It's better to be seen and say nothing and be thought stupid than to speak up and remove all doubt.
I do remember that now that you say
I
that.
think I got it right.
Yeah,
Don't remove
probably
all.
where I got the, what I just said.
I didn't hear. What did you just say? What was your?
My memory's short. I can't repeat it.
Okay. Okay.
Would you
All
rather
right.
be seen or heard or both? I think was the
Oh.
question.
Something along those lines.
Yeah.
I think both is in this day and age. I mean, we're beyond radio,
Yeah.
so you need to be seen and heard.
And you have many platforms to do that on now.
Yeah,
That's for sure.
yes, you do. It's growing daily.
Did you see? I just caught Reuters came out and said that Tesla was going to cancel the low end car.
Right?
The stock dropped, and then Elon came on to X and said Reuters is lying. No, we're not. And the stock jumped back up.
Is that right?
Really? Huh.
Yep.
Huh.
Yeah. Let me see if we can pull a chart up on it.
I think it's going to be I think their earnings call is next Wednesday. I think that will be very, very interesting. Because the other element that is, what did they say, in the United States? Um, Hybrid car sales were up 40% and electric vehicles were down. And I think it makes sense that there's a lot of questions that come with an electric vehicle. Um, does anybody have a hybrid? I didn't know this, but as I understand it, the hybrid charges itself.
Yeah. That's
It
what the
does?
Prius is.
Okay.
I just had a friend come to my house the other day that brought in a brand new 2024 Ford F-150 pickup, 6-cylinder hybrid.
Yeah.
Yeah.
I get, isn't it Ford and GM are both canceling their or postponing their efforts in
Ford
full
has.
EV and they're moving it more towards
Right.
hybrid?
Yeah.
Right.
Yeah. So this is Tesla 1 minute chart. So that was at 10:04 a.m. this morning. And then this is Elon's tweet right about
Oh,
here
yeah.
at
Oh,
10:35. Yep.
how about that?
Yeah.
You can say
Interesting, huh?
you can say he moved the market.
Or one of them did.
Yeah. Yeah. I guess.
Like looks like both of them did.
Yeah, right. Somebody
Yeah.
Hey
made
guys,
money.
I'm driving. I'm driving, so I can't see that. What did Elon do? What happened?
Reuters came out this morning and said that Tesla was canceling their low cost vehicle and the stock dropped, I believe, 6% total. And then Elon came out basically 30 minutes later and said Reuters is lying, and the stock shot back up.
So there you go.
There you go.
Um, I may not make it through the meeting. I've had diarrhea for 4 days now. So if you see me jump up and leave, you'll understand why. I think and where Anita and I are trying to figure out what it is. And Sunday we went and I every day for lunch I eat a bowl of mixed fruit, apples, bananas, berries, whatever, a half a cup of yogurt, and then a half a cup of granola. And I changed my granola. I bought some. The only thing that was open on Christmas was Walmart, and I went to Walmart and they had this new pack and it had all kinds of stuff in it. And so I got it, and I ate it on Monday, and Tuesday I exploded. And I worked my way through that and said, oh, okay, I'm going to be okay. And so Wednesday for lunch, I ate the granola again, and Thursday I exploded. And right now it's about every half hour. I find myself sitting on the throne.
Wow.
So if I get up and leave, it's,
If you had tweeted that out at around 2:06, Walmart stock probably would have tanked. And then Walmart would have come back out at about
That Kerry's
2:30,
line.
2:36 and said, no, it's not that.
Yeah,
And the
well,
stock would have shot back up.
probably. Okay.
However, paper products are going through the roof.
Paper products, yeah.
There's a shortage of Charmin in Birmingham.
I can believe it.
I feel for you, Kerry. I'm
Oh,
sorry.
no,
I'm not poking
you
fun
don't
at
have, you don't have any idea how I feel
you.
from
Please,
here down.
keep it there.
Oh, I do.
Okay. With that in mind, I wanted to share some things with you. You may have.
I think you already
have,
did. I
no,
think you already did
I
share some things with us.
already shared too much.
All
Okay.
right, I'll put myself on mute.
I have gotten very wrapped up in and I think John said it one time, with all this artificial intelligence and all this data, why can't we just ask what the stock price is going to do and get the answer and take all the guesswork out of this? And that resonated with me. And John and I have had a long history. And I thought, I got to find an answer to John's question. And so I've been building some spreadsheets. As some of you may know, I love spreadsheets. And I thought, well, what determines the price of a stock? Is it what it's worth today? No, it's not. It's what it's worth, what the market feels it's worth 90 days to 360 days in the future. So it's all based on its future earnings. And so I said, okay, I have built a spreadsheet showing the historical growth of all 39 of the stocks and shown what their averages were, and to gain confidence that in the long term those stocks will continue to give you a return. I said, I need to now build a cohesive chart showing future earnings and past earnings. And I need to go find that data and build the chart. So Trent, I'm going to try to share my screen. I think that's it. Okay, some of you may have seen this. I used it in a video. I've done some changes on it. And it was in yesterday's video. I basically said that if, and let's use Air Test. If Air Test tells me that their earnings in 24 are going to be down 19%, up 15.8 and 25, and up 261 in 2026, and their current price is this, and their future price is going to be determined by these numbers, then I should be able to predict the price of Air Test in 25, 26. Okay. And then as I did it, I had looked at this and I said, wait a second, there's a problem here. Air Test PE ratio is 26, and what's that? IBM's, or no, ARM's is 105, and Snowflake's is a 168. So there's something missing here. I can't predict the price based on, so I tried using what is called a PEG ratio, and that is you divide the earnings per share into their, no, you divide the PE ratio into their earnings to share, and that gives you a ratio that you can compare to other stocks, but it still didn't level the playing field. So over the last 2 days, I got involved in a little bit of an exercise, and I added that to my chart. And what this is I'm going to gather the earnings per share for all these stocks all the way back to 2009, and then see if I can create a formula that gives me some predictive capability on these stocks. I did it on Apple, and then after I sat down with Mark and Trent at 1 o'clock, I said, I need to do it on another one. And Adobe is getting very close to, or it's actually below my buy-in price. And I almost bought some today. And I said, I need to run my chart on Adobe. So I hustled and I did it. And what you're seeing here, and let's start with Apple. Apple's earnings per share in 2009 were 32 cents. 10.54, 11.91. The change is represented there. So from 54 to 91 is a 64% increase. From 91 to 158 is a 73% increase. Now here we had a loss of they said their earnings were going to go down in 2013. So I went through all of these. Some things I thought were interesting to look at. Here we had in 2015 a loss in their share price, but their earnings that year were up 43%. And this just goes to prove that price has nothing to do with that year's earnings. It has to do with the following year's earnings. So the price of the stock was down 5% because the market was anticipating a drop in earnings the following year. We can learn from that. Look, happened the same thing here. Same thing. Earnings are only up 0.3%. The stock's down 26. Now, that caused me then to say, Apple's down 10% this year, but they're projecting a growth of 9%. Wait until the next earnings call, and let's see if that doesn't go negative, because the market believes it's going to, from what I'm interpreting here. So then I said, okay, what is the correlation between earnings and stock price? And so I said, I asked, what is the average earnings projection since 2009 through 2026? It's an average of up 26%. What is the average share price over 2009 through current price 2024. It's up 34% or 35. So what that tells me is that 37% of the earnings price comes to the share price, 137%. Does that make sense? Earnings average up 36 or 26, stock price up 35. The difference is 37%. So I then say, okay, we're at, this is the current price. Apple is saying they're going to be up 9%. So 37% or 137% of that 9% is going to come to their price based on history. So if their current price is 169, their price at the end of 2026 will be 190. And they will have a 12% gain from today to the end of 2025. I then take the same number and just extrapolate it using their earnings projection of 8.7, and we get another 12% gain, and Apple's price at the end of 2026, according to my analysis, will be $213 and give me a total return between today and the end of 2026 of 25.69%. Does that excite me? No. It's substantially lower than their, what is that, their 13-year average. So that's good information to know. Now, I did the same thing for Adobe. I actually expected Adobe to do better. But as you can see, and I want to highlight these losses, the same numbers or same basic thing I'm doing. And I come down and say, now here, the earnings were up average of 32%, but the stock price was up 24. So only 75% of the earnings came to the price. So again, based on that information, and that they are saying, and look at this, in 2024, they projected their earnings up 95.8%. And then 8.3. That's why it's down 6 or 16 now. And again, same thing. Projected 3, year before, oops, down 40. So anytime their earnings drop or projections drop substantially, it's going to generate a negative price or a negative growth the preceding year. So based on this, current price of Adobe is $485. In 2025, you'll end the year with a 6% gain at $515. And at the end of 2026, you'll end up with a price of $584 or $587, giving you a 14% gain for the year and a 21% gain overall for the whole period. I think I'm going to see some very different numbers as I go through some of these other stocks, who you can see Air Test is one of course, that I like a lot. Or no, this is, what is that? That's UCTT. None of you know what UCTT is. It's a company that makes chemicals that they spray on the wafers to make sure they're clean. They spray on all the machinery that ASML makes. And they are projecting in 2024 a increase of 154%, followed by an increase in earnings of 18%, followed by an increase of 70%. They're going to give you 150% return over the next 2.5 years, unless something changes. And that's why we have these charts. So as the changes come in, and there will be changes, as they have their earnings call, their projections will change up or down. So as long as we are inputting the data, this will, to my understanding and belief right now, will give me a good barometer as to where I want my money. Because what I'm going to then do for my portfolio is I'm going to come over here and I'm going to say, how much of my investment do I want in each of these stocks based upon their anticipated gain? Okay? Do I want 5% or not 5%, 0.5%? No, 5% of my portfolio, 2%, 3%. And then based on, again, when it all gets done, I'll be able to hit a button and it'll tell me what my portfolio should be at the end of 2026. So we're not only digging in and finding a window of what is the potential gain on each one of these stocks based upon their earnings and their projected earnings and their history of their earnings. Now, what's after this? Well, what other things affect a stock price? Their revenue. So would it make sense then that I come in here and put another line and track their revenue and see how their revenue, their earnings, and their stock price relate to each other? What about their free cash flow? What if I put another line? And where I'm going is, I believe in my heart, if you've got enough data and you know how to interpret that data, you can predict anything. And I used in my video yesterday the example. In 1923, people, when they wanted to know what the weather was going to be like, what did they do? They walked outside to determine what the weather was going to be like, because they had no clue. Somebody probably figured out, hell, if I call my friend in St. Louis, I know that the weather comes west to east most of the time. Maybe I could call, and if he tells me it's raining, I'll know that it's going to be raining. And then I need to know how fast the wind is blowing. Oh, but wait, sometimes it comes from the Gulf. So the only way you could determine the weather in 1923 was to walk outside. That's exactly where the stock market is today. The only way you can determine what the price of a stock is going to be in January of 2027 is to guess. You have no data to give you any clue. Or you could tune in to CNBC, or you could tune in to Meet Kevin or somebody like that, who will tell you it's all dependent on interest rates. Oh, really? I think it has more to do with earnings. Now, are earnings affected by interest rates? Of course they are. But I sit down at lunch and I always watch, and all they talk about, how many interest rates hikes are we going to have this year? I believed it was 4, but I'm now down to 2. Why are you down to? Oh, because of what Jerome said. I think it has more to do with how many dollars you spend at Amazon. I think it has more to do if you buy a Tesla or you don't. I don't think it has. Now, whether you buy a Tesla or you don't may have something to do with interest rates, but I think it has to do with earnings. Okay? So that's what I'm going to do. I'm probably, as a result of that, I'm probably not going to be making a video every day in the future because this takes time. The first template I did took me roughly about 4 hours, the Apple. I did the Adobe in about a half an hour because I'll show you exactly why. Whereas let's do, you see that's a formula. I have to create that formula. That's a formula. Y41 times V41, bracketed, both of them times AA41 plus Y41. And that comes up with that number. Do you know how long it takes for me to figure out what is Y? What am I multiplying again? I sit down and I write it out on paper. I do it with my calculator. I come up with the answer, and then I put the Y's and the Z's together. But once you build the template and you put all these numbers in here, then all you got to do is copy and paste, and everything else fills in. Now what we're trying to do is find where I can get the data that it automatically feeds. But there's not many places where I really trust the data. Any questions on this? Any comments? What do you think? Do you
Kerry?
believe, I guess the best question, do you believe, like John asked, with artificial intelligence and all this data, why can't we predict what the price is going to be of a stock in the future? Do you believe that's possible? John, do you now believe it's possible?
First of all, I don't talk like that, Kerry. It's not fair. I don't talk like this, but but I think that with AI and the stuff that Mark has up his sleeve, it just seems plausible that we'll be able to do that. So I like what you're saying, and I believe big time in earnings. I like to look at stocks that have had 2 good earnings, and then I go with them. So I hear what you're saying. It makes sense to me.
Okay. All right. It does to me too. As I say, I think data, as Matthew McConaughey says, is data the new gold? Yeah, it is. And again, you take this sort of information and you say, what could you do with it in the medical field that you could track, who gets cancer and what are their symptoms and what is their past history? Can you get to the point where you can predict it? Yeah, I think you can.
Well,
particularly when you unleash
the health insurance companies have figured that out.
Yeah.
Because they know down to the month how your body's going to behave based on your when you submit, I think about our household. We've been in the doctor's office, if not operating room, if not emergency room, 6-7 times in the last 6 months.
Wow.
They know that I'm now 55. Right? They know. And they know the probability of how the things I was in for, things Ginger was in for, what's going to happen next, because they have the data. And I think, they're the early arrivals when it comes to AI. One thing I wanted to ask you about that cheat sheet was when they say, for instance, Tesla comes out and says, we're projecting, at the end of fourth quarter last year, they said we expect slowing in EV sales. And we're expecting, say, instead of a 10% growth rate, hypothetically, we're going to have a 2% growth rate. That growth rate into first quarter, second quarter of 2024 is reflected in the stock price in the first quarter. Is that how I'm reading that chart?
No, I would say, let me,
Because when you had that up, the way you broke it down, so for instance, if you go to Apple and you have 2019, okay, you see that there? It says negative 0.03%.
yeah,
Is that number a projection?
that's a historical number.
Meaning, where is that? Like, how do you?
That's a historical number. That is, in fact, this one in 2024 of 7.22, that is a projection.
Okay, that's what I'm getting at is,
That number could change next Wednesday.
okay. So the 10%, negative 10%, that's the stock price today, correct?
Yes,
And that is based off of whatever the stock price was the previous quarter?
that was
Or
that. No,
or
at
year
the
to
end of the
date?
year. The end of the year,
Okay.
or the beginning of the year.
So when I
The difference between what it is today and what it was on January the 2nd.
Okay. So projecting out, you have a 9% projection of
Yeah.
earnings growth.
That's what Apple is telling us.
Okay, and so you're projecting that the price of that will be reflected of the 137% of the 9%
Yes,
plus today's price. Is that
correct.
how I need to think of that?
Yeah, that's what the 190 represents.
Okay. And that equals the projection of what 2025 would potentially, the price point would be by
At
the end of 2025.
2025, or the end of 2025.
Okay.
Okay.
Yeah. Thanks.
All right.
Clears that up.
What I want to share with you is, this is what I had yesterday. I woke up in the middle of the night while I was sitting on the toilet and decided that wasn't going to work. I needed to go get these numbers. And so that's
where it came from.
And what I know is within 3 weeks, I'll find something else to make it better.
So I don't know how you would figure this in, but if you mentioned revenue, if you look at the revenue's rate of change, so what is that rate of change year over year in revenue, and how does that reflect on earnings per share / growth? And that could give you a more accurate, give you another level.
And I think what we're talking about is, the more data points that you have, the more accurate your number will be. But the key is, how do these data points relate to each other? In other words, does earnings carry the same weight as revenue? Or is there an equation, and how do you determine that equation? And I think the only way you determine that equation is look at past history by saying, okay, if I change this percentage based on now not the difference between earnings and price, if I also put a number now up here for revenue, how does that relate?
It's sort of like A plus B equals, it all sort of feeds each other. Your revenue feeds your earnings per share, your cost of money affects earnings per share, which then eventually affects stock price in some way or another.
And then the other things that come into play is, in many cases, something happens that the revenue could be up substantially, but they bought some new equipment. Or no, but I know the one that Palantir, they paid their employees in stock. So they depleted their number of shares and kept their expenses down because they weren't paying their employees with cash.
Yeah.
In other words, the stockholders were paying the employees. So those, I guess, I don't know how they fit in, but I think that's what makes the puzzle interesting.
It's sort of like it's a domino effect. It's identifying what is the first domino that then is pushed into the second domino. And it's
Because
just a
again,
matter
you look at this and say, the stock price was down 26%, or where was the one that was really ridiculous? Down 5%, but the earnings for that year were up 43%. Why was the stock price down? It was down because of that. Because the projected earnings and this price reflects not what it's worth today, but what it's going to be worth next week or next year.
I think this in combination with technical analysis is
Oh yeah,
very key, because as we all know, the fundamentals can be spot on, but if if the stock is trending south, it's trending south.
well a good example of that. On up here on my cheat sheet, no, that's on another page. I saw that Adobe was down. I went to my trading views, and Adobe is below the Fibonacci retracement level. Let me come off, and you put up Adobe, and and again, remember, based on this, Adobe is only going to give you a 12% return between now and the end of 2025. But let me take this down, and you put up an Adobe chart today.
You see that?
Not yet.
You see that?
Look at how Adobe has come down. If you do a Fibonacci retracement from here to here, that's a weekly. Okay, you're going to find that it's crossed the Fibonacci 50% retracement.
So you're really, if you follow this, there is a lot of, you're saying at $490 or so, that is sort of that range. Anywhere between 550, 50% is
right there.
490.
That's a signal to buy.
Well, I think it's a combination of a signal to buy in combination with, because this is your 9, that white line's your 9. So every time it's hit that 9, it pulls back. So until you get, and I think that's where you have multiple indicators, and like Mark has taught in swing trading, you have a negative RSI, you have a RSI of 3170, you have a declining MACD, you have a declining slow stochastics. This, based on Fibonacci alone, this is in a zone where you probably want to start considering consuming, buying.
Yeah.
But I would say you could be wrong in a big way.
Yeah.
Because
and based
it's still trending down.
It isn't going to be a big winner in the next year and a half. It's got more downside.
Well, and I think that's where you bring these two fundamentals and technicals together. It's sort of like you have the fundamentals, it gives you the the financial story, and then you come back and you confirm it with the technicals, and then you make your decisions
Yeah.
based on that. Yeah, interesting.
Yeah.
Very cool.
Let's pull up Apples now, since we were looking at that.
Oh, okay. I mean, Apple looks like Adobe.
Yeah.
You know,
Yeah.
it's, if you think about it, between what, 166 and 197, going back to May of 23, it's basically gone sideways.
Hmm.
And so if you're like a long-term swing trading it, that would be one way to look at it. Yeah.
Well, I think, and again, I don't know if you read, they have totally shut down their EV market, or their,
yeah,
and they fired, I think, or laid off 600 people that were in that, and now they said they're going to go into robotics,
yeah.
and they're
I
going to
guess
make
it's a
humanoids.
it's a question. I watched a video the other day by Gary Cardone. Mark turned me on to this, and he was talking about, we were talking about Bitcoin and all that. And the guy was selling a $2 million home, and he said, and he said something that really struck me, and that was, what is the potential? How much further in price can this home go from where he bought it at 1.7 to now it's today's value at 2 million? How much further can that home go? You know, and chances are it's not going to go much higher, right? I mean, during the last 3 years, you've had a massive home purchasing, period of time. But when you get to over 2 million, there's not a lot of people who can afford that. And I wondered about that, and I asked, well, what about mature companies like Apple? How much higher can Apple go? Can it go over $200? Can it go to 300, 400, 500? Does it have the growth bandwidth, the product lineup to make it go higher? Or is it really, it's gone as far as it's going to go, and you buy it on the dips and you sell it on the peaks?
Well, I think you're
that
right.
kind of stock?
And if you look at the earnings growth on that Apple chart, there were times when they were growing at 68%, the earnings per year, and now they're down to 9.
Yeah. You think about when you enter the Dow Jones Industrial Average, is that sort of the last leg?
Yeah.
That's the nursing home for mature stocks,
I think it is.
And I think that's where, if you're looking at this from the perspective of, I have to grow at a certain growth rate to achieve my financial goals, if it's retirement or whatever it is, you buying Apple, even though, I mean, you could probably, like you said, you can it's a more secure, established company, but are you going to get the return that you need out of it to achieve your the end result that you're trying to achieve, or end goal, if it's retirement or whatever? And that's where going down the market cap scale is something to take a look at.
Yeah.
Well, you look at Apple, like you said, the revenues are just down, quarter after quarter. But then again, how much of that buildup in their stock price was buying back their shares? Okay.
Yeah.
Borrowing and buying back their shares. And a lot of these tech companies do that. Well, at some point, you got to pay the piper, and piper is paid through revenue and net income, and they're not showing it anymore. So again, you can look at the charts. I mean, if you're a long-term investor, it looks like it's trading under the 200. So I would just stay out of it. at that point from a long-term point of view until they could get back above the 200. But yeah, there's a lot of factors that factor into that. And again, you got to look at it in a way. Are you swing trading it? Are you a long-term investor? Why are you in the stock? What reasons are you in it for? And when will you get out? What would force you to get out of it? And again, we're talking about what's the risk versus what's the reward based on your entry price. And I have a different view of it that, I don't want to sit in an Apple stock that's dumped like that for the next 5 years until I hope it comes back to my cost basis price, because that's my lost opportunity cost. That money could be doing better in a treasury bill, for 5 years or however long they're good, or some other stock, or, some other asset class, as opposed to just sitting there and not making any money for me. And again, we talked a little bit about this in purchasing power at the Platinum Zoom call.
We talked about it pretty extensively, Mark, I think.
What's that? Oh, yeah,
I think we talked about it pretty extensively.
Yeah, we pretty much made it the theme of the day.
Yeah.
Tell me
Hey,
what
Bob.
you mean, purchasing power. How are you relating that?
So
Well-
the other day, so I'll give you an example. Wednesday, Ginger and I left the studio. We had to go to the grocery store to get some things. And we got a pack of ground meat, 2 boxes of granola bars, and a handful of other things. And the bill was $75. Okay. We came back, or I was driving over here today or on Thursday, and Ginger calls me and we're talking, and she goes, by the way, what did we spend $75 on at the grocery store? I can't figure it out. And it really sort of hit me. And that was a year prior, the same items I would have bought would have probably cost about $55 to $65. So in a year, my purchasing power declined. Yeah. And that's a relationship of inflation and the currency for which I bought those groceries with. My currency is weaker. The cost to manufacture those products has gone up. And so now my purchasing power has declined. And if you look at the historical viewpoint of purchasing power, we are constantly declining, which if you relate that to the stock market or retirement planning, that is one thing we never talked about as a financial advisor, in that true inflation is this, the power of my currency is this, and they keep widening. Is $500,000 in retirement savings going to be enough for the next 30 years of potential of life?
Well, exactly, because when you retire, you have, you plan for your retirement. I want whatever, let's say $1 million. And in our brain, we think $1 million, that's a lot of money. Well, $1 million is a lot more money 20 years ago than it is today.
Sure.
Okay. And just thinking 20 years what it's going to be worth. And so if you're 60 and you retire with $1 million in savings to draw on, plus your $2,000 a month in Social Security, and you decide that the 4% rule is going to get you $4,000 or whatever a month out of your retirement, plus $2,000, so you're making $6,000 and you're doing okay until inflation comes in at 17% over the last 4 years. And then you've got the Treasury printing out more and more money through T-bills because our debt's going up $1 trillion every 3 months, and we're just paying for it with made up money. So the value of your dollar over the last every year has been devalued by 10%. So now you're down 17% plus 10%, and you're only 3 years into it, and you can't afford your doctor's bills or your gas in your car anymore because you're on a fixed $6,000. Okay. And that's what's really going to eat you up. So when we started talking about when we're investing, we gotta invest to beat more than just inflation. We have to invest to beat, a devaluation of our currency. Otherwise, that $1 million by the time we get there is not going to be worth it, 5 years after you retire. So that's what we were talking about, purchasing power and looking at your your accounts and your portfolios and how you, I mean, I don't have 5 years to wait around for Apple to come back, when you think about it in that term,
No,
No,
and Trent brought up a good point, and he dealt with it as an advisor. He brought up a good point that, 3 years after, one of his clients retired, they called back and said, "Hey, I need more money," you know.
Mhm.
And why did he need more money, Trent? Because prices went up.
prices went up, prescriptions were being
yeah,
And the current and the
written,
currency was
handed out.
devalued. Yep. Yep.
Yeah.
And currency was devalued.
And then all of a sudden your
So
retirement projections get, oh, you got enough money for the rest of your life. Well, sorry, you got enough money for the next 10 years. Maybe you should go back to work,
Yep.
and at that point you're 70 years old. So I think in here, and I'm just going to bring this back around to your cheat sheet. And that is when you're looking at these companies and you're looking out into the future. So I'm 55 or I'll be 55 soon. If I'm looking at 65 as my retirement goal, I have to fight a couple headwinds. One, what is what's the cost of inflation? Two, the cost of devaluing US dollar. And what am I going to, in what is the end goal? What am I going to need to achieve every year in a return to achieve those financial goals after the age of 65? Well, if I'm already losing 27% to devaluation and inflation, I have to return a minimum of 36% return year after year based on today's numbers. So that means I have to change my asset allocation model and how I manage my money. Bringing that back to your cheat sheet, you have to identify companies who are going to have revenue growth, earnings per share growth, that's going to relate in stock price growth more than just an S&P 100 year average of 12% if you're going to do this. Now, Mark had pointed out to me before we came off the gold standard in the early 70s, we probably didn't have this problem as much. But because we're off the gold standard, because now we have printing of money, we have 34 trillion in debt, and we're adding what, $1 trillion every 90 days or two. So is that the number, Mark?
yep. Yep.
This has got to be factored into our long-term thinking and how we asset allocate and manage assets. I posted something on Instagram earlier this week, and I took the BlackRock 60/40 institutional mutual fund. So they mimic a 60/40, 60% equities, 40% bonds. And it's an ETF or a mutual fund you can buy, and it just stays that route. Well, in the last 10 years, it's averaged 8%. What they don't factor in is the cost of a devaluing dollar and inflation. And in essence, you've actually lost money owning that asset class or that asset. And that really, my whole point of my Instagram post was you have to start thinking differently when it comes to your asset allocation model. If you're holding bonds right now, you have been losing money. And the only thing that has really worked in the last year or so is really those 7 stocks. The S&P is the S&P. Yes, the S&P's up, the Nasdaq's up, the Dow's up. Great numbers, but factor in the cost of a deflating dollar and rising inflation costs. And I think that's where we as investors have to really start factoring more variables that affect the overall buying power that we will have today, but more importantly, down the road in the future. So,
Bob in upstate New York.
So it sounds like to me, this chart that you prepared in the cheat sheet, it's the third chart,
Right.
is not something to pay attention to until you have more refinements to it.
I would say by the end of next week, it'll be done.
All right. So I'm not going to ask any questions on that, waste any time, but I want to tell you, I just got a new computer system, and I know this is one of the things you've done a long time ago, but how you had an Excel spreadsheet up there. That's a cheat sheet, I presume. How do you not download? How do you have prices coming into your Excel spreadsheet?
You create, well, in either Excel or Google Sheets, you create formulas. You put the first thing you do is you go to a cell and you put the ticker,
Mhm.
okay? And then you go into the header and you go to, I believe it's data, and it says stock. Says stock. You click on stock, and that will change this. You want me to go and can I?
I'm about to pull one up and give you an example.
Okay, and it'll give you the stock, and then it gives you a little flag that you can fill each one of the cells following with the data you want.
So Google will pull the price for you. Now I'm going to show you in
Well,
just
actually,
one
it's
second.
Microsoft if it's Excel.
Yeah, you can do it in both.
Yeah,
I'll show
Google
you.
does it, and
But can I say this? I really prefer Microsoft. I don't do Google.
okay, Google's a little bit more complicated.
Yeah, I've never had good luck with it.
So this is a Google sheet. And if you just type, for instance, you want the stock price.
Go to a blank Excel spreadsheet. Can you do that? Or I can do it.
Yeah, I can pull up Excel. But anyways, if you just like, for instance, in this, Google Finance, that indicates to Google or the spreadsheet that you're now going to be doing things in a financial manner. And then you put in, the cell that you want the stock or what stock you're referencing. That's the sheet 1 B3 phrase, and then you put in quotes price, and it will pull the price of that stock up. I believe it's
I
just
can show him a much easier way to do that, Trent, if you'll let me share my screen.
sure, just a second.
Okay. I'm just going to do it right. I'm going to take this out. So I want Apple. I go up here where it says data. You see that, Bob?
Yes, I do.
Okay. And then I come over here. You see where it says stocks?
Oh, stocks, I see. Yep.
Click on that. Now, let's say we got you in the, and it comes over here on my side and it says, are you talking about Apple on the,
Yes.
I said, yeah, that's what I want. Why didn't it light up? Select. Okay, there now it's given me the ticker. Now I come up here and I click on that and you see that flag that came up?
Flag?
Or
Oh, that's a flag?
or that's a page.
Yeah, page.
Click on
Yeah.
that. I
Yeah,
click on that. And then I come down and I say, give me the price.
yeah.
It fills that space. Let me open it up so it can be, there's the price of the stock. Okay, then I hit it again and I say, give me the PE ratio. That's the PE ratio. Then I hit it again and what else do I want to know? Previous close or PE open, oh, market cap. I always use market cap. There it is.
Yeah.
Now what you're going to have to do,
Yeah.
market cap, I always do market cap. And you use the divide thing and you put 1 million. And now that converts that to a number that is more manageable. That's 207, 200, I guess that's
2.6 trillion.
2.6 trillion.
Mm-hmm.
Okay.
Yes.
Now, if you want to then you can create formulas. And what or again, let me see if there's anything else that we want to put in. And what it will do, it will fill the first open cell. Okay.
All right.
So if I want change, that's how much it changed today. If I don't want that, I delete it. I come back. I do that. Okay.
Yes.
All right. Now I take this and I copy it and I paste it. Okay. Nothing there. Watch this magic. Let me move you. Stock. And there it fills it.
Gotcha. Cool. And so every 15, 20 minutes, this updates. Is that correct?
Every one of those numbers will update.
All right. All right. Thank you. Because you took a lot of the mystery out.
I'll send you a bill.
Yeah.
Dinner
By the
out.
way, that's on my New York City address, not my Western New York address. Thank you, Kerry. Appreciate
You're
it.
welcome.
We'll split the bill. I was waiting for that one. That was good.
Okay. Yeah, I know Zeke, you would ask about that. And what I would ask you, what you do, Bob and Zeke, is then let's say you want you want to know what was the stock price on January the 1st of 2022. Okay. That's a complicated formula. So what you do is you go to Google and you say, what is the Excel spreadsheet formula for the stock price on Apple on January the 1st, 2022? And it will take you to a page and it will show you that formula. You then just copy it, take it to your Excel spreadsheet, paste it in, and there you go. Now, what you need to do is keep a template, keep some place, because 3 days from now, you won't remember how to do that formula.
I understand that.
So
Totally.
what you end up doing is you go back and forth. Every time I recreate a new Excel spreadsheet, I go back to the first one I created and find the formulas and cut and paste them. And then once you build the line on a stock that has everything that you want, you now just copy that line, paste it in, and then enter a new ticker symbol.
All
And
right.
I think you
Gotcha.
can see how you can build a phenomenal chart in a very little bit. And it beats the hell out of writing all those numbers down on a piece of paper, like we used to have to do.
Years ago, I met a guy who was at a conference and we were talking about data analysis and all this. And the guy said, yeah, he said, we created a spreadsheet that filled every cell in Excel.
Oh my God.
And we ran out of room. He said, but this was back in like 2004. He said, but it tells us when to buy and sell stocks. And at the time I was with Ameriprise Financial and I was like, you're able to do that? And he goes, well, he said, we're starting a hedge fund on the side. And that was my first introduction to algorithmic trading, was him using an Excel spreadsheet. And I think eventually they got some guy to program the whole thing in Python, but he eventually, after about 2 years, left and started his own shop. And that's what he did. And so Excel, learning just how to use Excel or Google Sheets is really can become a very powerful tool.
And it can be used in a lot of aspects. I mean, your budget for your house.
Yeah.
You can use it for, and again, you learn that multiplication is the asterisk, divide is the backslash. And again, anytime you have any question of how do I do this on Excel, you just pick your phone up and ask Google.
No, I got one better for you. You go into ChatGPT 4 or Perplexity and you say, this is what I want to create. Can you create a Google Sheets for me, or a Excel spreadsheet, and it will pump it out for you. It'll pump out all the data, but a lot of times you have to go back and forth with it because something doesn't work and that, but it'll write the whole thing for you. That's where that's where programming really is going. That's why entry-level programmers are, I think, will become eventually a thing of the past. It'll be the guys who fix the broken, things that don't work that AI can't figure out. And we all can become programmers now.
Yeah, and at some essence, that's what Excel is. It's you're building your program, and you're pulling data off the internet to fill that program to help you solve problems.
Yeah.
So
Yeah.
powerful tools.
We on the Discord, we've been talking a lot about Bitcoin, especially with the rise of it. And Mark and I think, talk every day about if it's through text or on the Discord or just on the phone. And we put up a video yesterday after a hour conversation that we filmed. And it's interesting how this evolution of my knowledge of what Bitcoin and crypto has evolved. And I would say in the last 60 days, it's evolved from a currency that's going to, become the world currency to a form of store of value. And what I've discovered is there's not a lot of forms of store of value. Gold can be considered one. Real estate can be considered one. A Picasso, a Rembrandt, a de Kooning painting, one of a kinds. And then the factor of supply of a product. And it's interesting and with my earlier reference of inflation and the devaluing dollar, having assets that are rare, or there is a minimum amount of them, like Ferrari made, when they created the Enzo, they made 299 of them. You had to be invited to buy it. This was back in the 90s. And then a handful of people went and picked it up, and within 30 minutes totaled them because they couldn't handle how to drive them. So that created a less quantity and increased the value of Enzos. Now Enzo, I think you'll spend anywhere between 4 and 6 million for a car that at one time was 900,000. And it really got me, this conversations that we've been having about, Mark and I have been having about Bitcoin and that store of value of having assets that grow. Bitcoin has now become a whole different view for me. It's no longer a currency. I saw a video the other day, Dave Ramsey saying this is a piece of crap. It's not a it's not a currency. It's not going to be a world currency. And I think the misunderstanding of what Bitcoin is and is going to represent, and actually should represent more, we should be, as investors, looking at things from a more of a perspective of, I buy this asset, is it going to hold its value and increase over time in value? Or is there somebody who's going to dilute the number of shares? And is there a committee that's going to print more of that currency? And I think that's, one of the things that I really have started, we spent a whole lot of time on it on the Platinum Channel call today. But it's something that I think people should educate themselves more and more about, is what is Bitcoin? What does it represent? And how could it benefit you in the long run? Mark, if you have any more you want to chime in on this, but it's something that I look at and I go, as we come into this this month, there will be less Bitcoin produced for the next 4 years at come the 20th of April, it's going to create more interest in Bitcoin and more potential upside growth in Bitcoin.
Yeah, it's a basic economics 101 when you look at it. And I like trend. I've been interested in it since 2020, 2021. And I started listening to some guys, especially Michael Saylor, who put his entire treasury of his balance sheet of MicroStrategy into it by realizing that the currency that he had, he's an astrophysicist or something and went to MIT, and the currency that he has was devaluing, and in a certain amount of years, his treasury would be worth nothing, his company would be worth nothing. And he started looking around for some place to store his value, and he looked at gold and all the assets that you can. And someone brought up Bitcoin to him, and he's like, "No, that doesn't sound like anything to me." Until he started thinking about it a little bit, and he's like, "Well, what do I really want to store my value in?" And he says, "I want to store it in something that can't be demonetized, can't be devalued, like the dollar, and depreciated. And I want something that's rare, like that Ferrari that Trent was talking about." And the more he did studying about it, he's like, "Well, this is Bitcoin. This is a store. It's like digital property is what he calls it." Okay. And so I thought, well, this is interesting. I didn't quite understand it. So I bought into it a little bit, and dollar cost averages into it, and got some friends to do the same. And one of my friends, he went in, he bought a whole Bitcoin. So he's a full Bitcoiner. And he was a little worried a year ago when it went down to 29,000, but now he's pretty happy again. But two things got me interested more in it. It made me dust off my account a little bit, was like the halving that's coming up, like Trent just talked about, where there's the supply of Bitcoin is going to be in half. From being able to make 900 a day to only be able to make 450 a day. And the fact that there's only 1.9 million left, and those will be mined out over the next 115 years. The second thing was the demand side, that in January, the SEC approved spot Bitcoin ETFs, and companies like BlackRock, Fidelity, Kathy Wood, all got in and there's 11 of them right now, ETFs, and they are buying up everything they can, because the demand of people who are in these ETFs now is exceeding supply. And so just from a supply demand point of view, you started seeing the price rise up. I think it went from 50 to 40s to where it's at now, just under 70. And so when that halving happens, and again, these are just ETFs buying these up. Normally it takes 60 days, 90 days for like investment advisors to be able to buy these for their clients after they go through compliance, and 90 days will be coming up here pretty soon. So again, I see a huge demand for something that has never been hacked, who has gone up in value on average since it was inception 15 years ago, 40%, and doesn't deflate or doesn't inflate. It has no inflation because you have a certain amount. And so we just talked a little bit about it on the Platinum channel, how, as an asset class, now it's been accepted by the SEC, and it's been accepted by the big guys like BlackRock. And, Fink was out talking about Bitcoin in a positive manner this last week, whereas 3 years ago, it was a piece of crap, like Dave Ramsey was calling it. So it was something that, I look at it as I'm putting a percent of my investment portfolio into it. I'm not jumping in all the way and putting 100% in, but it's a part of the portfolio that I look at as, the same way you would have looked at NVIDIA, probably, 10 years ago or 5 years ago, and I'm just going to let it sit. And again, you don't have to buy a full Bitcoin. And I'll just relate a story that I was talking to a friend, and some of you have heard this, and we were driving down the road last week, and I was talking about Bitcoin. He owns a business. He's semi-retired. And I was saying, I was telling him all about it. And he's like, that's okay. I just don't understand it or anything. I said, well, that's okay. You don't have to understand. You just have to know it's a new asset class. I mean, when the internet came out, did you understand the internet? Well, no. I said, well, here's the one thing that you're not going to want to do. I said, a couple of our friends in our group, all you need to do is buy a tenth of a Bitcoin, which right now is, $6,800 gets you 0.1. Okay. And if Bitcoin goes up to $100,000, now you're at $10,000. If it goes to 1 million, that $6,800 is now at $100,000. Okay. I said, so the thing you're going to be really upset about, and I would be too, is if this thing actually happens as these people are saying it's going to happen, and because of supply and demand, let's say it goes to 1 million, and all 4 of your friends now have an extra $100,000 or whatever, and decide to take a trip to Bora Bora on first class all the way because we have it. You don't, and you're going to be sitting there going, why didn't I do that? It's just, it was something that I should have done. The risk reward was there, and that's what you're gonna kick yourself for. And he got to thinking about it, so we'll see what he does. But it's not for everybody. It's highly volatile. I certainly would not jump in both feet, and especially it's not financial advice or anything. I'm just saying that it's an asset class you may want to consider. Put some time into it. Learn what it is. We have a channel on the Platinum channel. People can talk about it if they want. There's some information on there. Again, but it's like real estate. It's an asset, real estate or diamond rings or coins, rare coins. That's just another way for you to hedge out your money a little bit. Maybe give you a little more positive purchasing power in the future.
And we were talking on the Platinum channel about, is this market rolling over right now? And are we going to see, a pullback of, 10+%? And I mean, I think we all agreed, it looks like it. I mean, the S&P closed below the 9 today. That's the second day in a row it's done that. And and you're looking at how bond yields are going up, so bond values are going down. When you look at how do you hedge this out without just going straight to cash, looking for asset classes that are oppositely correlated to your equity positions or your bond positions is going to become really important. And in looking at what the correlation of like Bitcoin to the S&P 500, it's almost completely opposite right now. And I would look at this as a commodity that could hedge out your equity and fixed income risk. So if you're looking at it from an intermediate term, so 90 days or more, or a long term, more than 700 some odd days, this could be a potential hedge to sort of zero out, not maybe unless you went really heavy, even out the downside. So if we do see a 10% pullback this next quarter based on potential earning weakness or guidance, more importantly, this could be that potential hedge or take the edge off a little bit. But as we get past the election, which I really think is the determining factor of where the market's going to go in the next 12 months, once we get past the election and depending on what direction that goes, we will most likely see the volatility in equities skyrocket. And having that balance, that hedge, is going to become more important. So finding asset classes that could hedge out, that don't suppress equity returns, that I think we will actually have by the election in a positive sense, is important. And I think that's where, I think that's a lot of in the deflation element of the dollar and inflation element of daily living. I think this is where you have to start really getting keen on how am I allocating all of my dollars, both short term and long term, and then what is my process to risk manage. And I think all of that, bring that all together and make that your study. You're going to preserve wealth in the coming 12 to 24 months, in a sense. So next week, I'm going to wear a tinfoil hat. So be aware of that. It's a joke. But because we've been talking about Bitcoin a lot lately.
Went over my head.
Tinfoil hat, it's the UFO thing.
Oh, okay.
Oh, yeah.
All right.
Anyhow, diversification, risk management.
Okay.
It's just an asset that, you know, we wanted to talk about a little bit because there's so much happening right now that this could be a pivotal point for it if halving works and then the demand keeps going up. It's just an asset class that could just, you know, over time, really do well.
Trent,
not,
last week you
but-
told us that somebody was going to put $90 billion into it over the
No,
week.
there was a 1.4 billion in cash that went into Coinbase last week. Of course, that didn't propel, but chances are that was dollar cost averaged in over the last 7 days into Bitcoin. And I think you're seeing more and more purchasing of the ETFs like the IBIT, which is BlackRock's ETF. You're seeing it sort of it moves with Bitcoin because it is Bitcoin. You saw what MicroStrategies has pulled back a bit in relation to Bitcoin, but I honestly think that you're seeing an accumulation phase if you look at it from a charting standpoint. As we get closer to April 17th, between April 17th and the 20th, the halving will happen, which is the reduction in the amount of Bitcoin that's being produced will occur. I don't know. I honestly think just the behavior of the market yesterday in reaction to the Fed president who made the comment about potentially raising rates and the 3-hour sell-off that we saw after noon central. I think it just demonstrates that there is a level of concern and volatility that is to come. And when I look at what asset class do I want to be in, the lack of interest in long-term U.S. Treasuries at the Treasury auctions is concerning. You know, what asset class can I hedge out my positions I want to hold for long term? And I think that's where, you know, the crypto market can come into play in your portfolio. So, but not all crypto is the same. Just remember that. No.
Yeah, I don't swing trade Bitcoin. I just accumulate and I'm just holding. So
Yeah.
that's just part of my long-term strategy is diversification, which I have, you know, like Bob knows, I have historical cars as a part of my asset. I have farmland, you know, so I diversify it long-term. And then short-term, I just will swing trade basically. But this, I'm not swing trading. Like I said, my largest position for long-term is probably Berkshire Hathaway. So
Tim, you wanted to introduce yourself.
Yes, can you hear me okay?
I can.
Yeah.
Okay, great. Yeah, I just wanted to introduce myself. I'm Tim McKella and longtime member, but first time live on Zoom, although I listen to the replays often. And Kerry, I watch your videos on a daily basis and follow Trent and Mark as close as I can, and always felt a little guilty not chiming in here because I work right in the heart of Silicon Valley. In fact,
wow.
yeah, I live here in Northern California. And matter of fact, I just retired last month.
Congrats.
Thank you. 63 years old, and thought it was a good enough time to get out. But yeah, our office was right in the heart of Silicon Valley, and we represent Semiconductors. We're a manufacturer's representative.
Oh,
So,
wow.
Kerry, I know your focus is semis, and again, felt a little guilty not chiming in and helping you with pronunciations on some of these semiconductors names, and
You'll never fix that.
and giving you a little insight here and there. But no, I just want to become more active, and certainly interested in joining the Platinum channel. Definitely enjoy Trent and Mark and the rest of the tribe's input. I need a little help from you guys. I've not been able to get on the website and only use the Discord sparingly, so I could use some help there. But yeah, that's pretty much what I had to say. I just wanted to introduce myself and kind of get involved as much as I can here in the future.
So what semiconductor firms did you represent?
Yeah, we started our company in April of 1989 with Micron. We represented Micron, which is
Okay,
near and dear to your heart right now. And yeah, represented them for 22 years.
so
And
let me understand.
yeah,
Representing, you called on foundries? Who'd you call on?
no, we call on Apple, Google, all the OEMs. And the way they use us, these semiconductor companies, is we're just a lower cost of sales vehicle for them. We live, our houses are right in the middle of Silicon Valley. Micron's in Boise, Idaho. A lot of the
Right.
companies, Bosch is in Germany. We represent Bosch Semiconductor. Giga Devices in China. They're all over the place. So they use our relationships and our expertise with these
I
big
see.
OEMs in Silicon Valley. So we act as their sales force in the Silicon Valley, if that makes sense to you.
Yeah, yeah. Okay.
Yeah.
So they're not,
Manufacturer, correct.
so they're not direct, or so you're like I was in the snow and skate industry and I was a rep. So I represented multiple lines, hard
Sure.
goods, soft goods, that whole bit. Is that similar kind of structure that you see? Is that what
It's
you're
a
talking
pretty
about?
cool business. Yeah, we don't have to inventory anything. We don't have to collect any money. We're just kind of a commission sales firm, if you will, commission only. So we are, I had 12 sales guys that work for me, and yeah, we called on the largest OEMs here in the Silicon Valley, and it got really kind of commingled over the years where back in the day, they used to do the design right here in Silicon Valley, and they still do, but it's commingled with other territories, China, Germany, India has a lot of software expertise. So it's gotten pretty complex over the years. But to answer your question, Trent, yeah, I think that's a pretty good comparison, actually.
Do you where do you see it all going? Say over the short period, 5-10 years. I mean, I get concerned because okay, I'll give you an example. I remember when snowboarding became legal on pretty much every mountain except for a handful in the United States, right? There is pure skiers. And so you saw this major explosion in the 90s, early 90s through the end of the 90s in the snowboard. Everybody wanted to be in it. Everybody wanted to be cool, the whole bit. MTV adopted the whole bit. And then all of a sudden it just fell off and normalized to what we see it today. And I look at other industries, we saw that, with the web, internet development, we saw that, with, everybody going to the internet, you don't have to make money. It's just put up a fancy website, that type of thing. Are we if you're thinking of it as the bell curve in semiconductors, are we at the middle stage of the upside of semis? Are we at the top, or are we starting to go over the other side for a period of time,
It's
in
a
your
really good
opinion?
question. Really good question. There's a term that we use in the semiconductor field that's called smaller, faster, cheaper. And that's what they're all trying to do right now. If you understand process nodes of building these semiconductors at the fabs, they're super complex. And TSMC is leading the way in that. And that's why it's so popular. That's why, NVIDIA's aligned with TSMC. And you've got other fabs like USMC and now Intel here in the United States that Kerry's kind of pointed out. So yeah, to answer your question more directly though, no, I don't think it's going away. I don't know where it's at in the bell curve. Not sure I have that wide of a view of things. I've been so immersed in what I've been doing and representing these guys and getting them designed in at some key customers, but it's certainly not going away. And semiconductors are just finding their ways into every subcategory that you can imagine. I go to CES every year, which is a consumer electronics show in Vegas. You guys probably heard of it. You just would not believe the different products that these chips find their ways into. It's consumer, it's health, medical, obviously, data farms, as Kerry's pointed out many, many, many times. And you just can't think of an industry that doesn't find its way into. So I think just in general, the future looks bright for semiconductor firms.
Tim,
So
are you
bringing
familiar with a company by the name of Skywater?
I'm familiar with the name, don't know a lot about them though.
Okay, I used to live in Minneapolis, and they have a fab in Bloomington, outside of Minneapolis, and then one in Florida. And I listened recently to their earnings call. And what I came away from there was they're only I think a $400 million company. So they're tiny compared to the others. But what I got from them was they have the foundry, they have a team of people who would come to a company and say, you need a special kind of semiconductor, and we can design it for you and then make it in our fab. So they're almost they sound like a boutique.
Yeah.
You know, and I thought when I heard that, I thought, well, yeah, that Macy's is selling handbags, but Louis Vuitton's making them special order, and I wondered, is that because it's I think it's about a $5 stock, is that a viable industry? Or
Well, I think, Kerry, I think they're an anomaly because really the recipe in the Silicon Valley these days is certainly not to own a fab. It's to use a fab. And what everybody does these days, and boy, we got contacted by so many firms, so many semiconductor firms, so many startups. What they all do is they design these chips
yeah,
and they use fab. They use TSMC is not a great example because that's high end, but
mhm,
they will use, different fabs in China and Taiwan and wherever they can find them. So Skyworks sounds a little bit like an anomaly and a boutique, like you said. Maybe they've got something there, but the cost of running a fab and cost of owning a fab is astronomical.
yeah.
And so I think,
It might be too small.
yeah.
You can't gather. You can't build your TAM big enough to
And how do you
support what.
compete? And how do you compete with process nodes that TSMC and UMC and some of the other ones? How do you compete with that?
Yeah.
That's what
Well,
I'd be unsure about.
Other than maybe specialization. And again, those of us who know a little bit,
Right.
if I needed a semiconductor for a specific need, I don't believe I could go go knock on
Right.
TSM's door and say, I need this, and can you help me design it? I
No, I
got to
think
find somebody,
yeah,
because as you say, they're going everywhere.
well, I think you're right. And obviously they feel like they've carved out a niche for that, and I'm sure they have.
And
Uh,
the other thing that I thought was interesting is they work on a basis that I finance the development and the production of the chip. So they have no upfront expense other than that they have already got the fab built. So it's not like NVIDIA. You go buy the chip from them. You actually go to Skyworks and you sit with their people. You design the chip and you pay up front for it. Now
yeah,
that sounded like a good business plan to me.
I think
but
so. There's a little bit of a one-stop shop there for some of these companies, right? Yeah,
Yeah,
they're not going all over the place for design, and there's also probably some added value of being assured that you have some fab space for your product as well, too. That's been an
is that
issue.
an issue?
It had been over the years, yes, depending on what fab you're talking about. So
Okay,
there's probably some value there as well.
okay.
I wonder, you look at how this whole AI, the chip thing is progressing as fast. And we were just talking about Apple and sort of has it matured to its full price range for the foreseeable future. And I guess my question is as these chips, and Kerry's pointed this out before, eventually we're going to have to replace all of our phones. Eventually we're going to have to replace all of everything that has a chip in it. Are you seeing that, or did you see that before you retired? Did you see that in these big companies like Apple? Did you see them going, okay, we want to advance, we need to advance this product that we're buying through you? Does that make sense?
Absolutely and definitely. And Apple is a customer of ours.
Mm-hmm.
Some of the products that we represented, we sold into them. They're very non-disclosure a heavy company, so can't talk too much about it. But yeah, I definitely
Yeah.
saw that, Brent, for sure. And you know, it's super, you know, you guys have a pretty good feel for it. You guys follow it. It's hyper competitive in the
Yeah.
Silicon Valley, and not only at the semiconductor firms, but the OEMs, which are the Apples and the Googles and the Fitbits and the GoPros. It's so competitive that you just can't believe it. You know, you can't
Yeah.
oversee it. So yeah, absolutely, I saw that.
Okay. You just wonder if a company like Apple is run its course, but if you know they got something up their sleeve.
Well, I think,
You
yeah, I
would
think
hope.
they're talking about, you know, as you guys know, you follow it just like I do. They're talking about robotics now. And I think the big thing with Apple, with a lot of these companies, they got to find a way to monetize their AI play, come up with an AI play. Obviously, they got Siri, we know that, but they've got to come up with something that they can monetize. I
Right.
think personally, that's going to be their biggest upsize. It's probably not going to be robotics. I think they're a little bit late to that game, just like they were in EVs. And that makes me a little nervous as a stockholder, but that's just one man's opinion. But I do think they'll have to monetize some sort of AI solution.
Yeah. Well, they're listening anyway, so they're halfway there.
Right, exactly.
Yeah.
Anyways, I did not want to you know, take too much of your guys' time, but
No,
No.
this is what we all live for.
yeah, well, I
You
love
know,
it.
somebody to pull the curtain aside and say,
Right.
look
That's
back
right.
here, look what I can tell you.
Well, I'd
Oh,
like to be
be
more of
regular.
absolutely like to be
And
more of
when
a,
is the show in Las Vegas?
that's every January. It's the first or second
Okay.
week of January every year. And
Okay.
it's if you guys ever have an opportunity to go there, it's pretty wild.
No, I'm going to tag along with you
Okay, let's do it. It'll be fun. Yeah, it's a good time.
because I'll get lost.
Yeah.
Right.
This last year there was, I think, well over 200,000 people attending.
Yeah.
So
Wow.
it's pretty crazy. It's a zoo.
Did you go to the NVIDIA conference?
I did not. No.
Yeah.
No, but I watched the replay and everything.
Yeah,
And
I did too. Yeah.
pretty
So much
impressive.
to be learned.
So much.
And it's like I said in the video that everything he said on the stage, they released in a news release the morning of. So we as investors, we can know everything by just finding the source of the data and taking the time to read it. I subscribe to the platinum or whatever level of Seeking Alpha. And I have my portfolio in Seeking Alpha. So every article anybody writes at Seeking Alpha on any stock I own, it hits my phone in the morning. So you can keep up with, and a lot of it's you don't really want, but it's phenomenal what's available to us today. Well, Tim, thank you.
Oh, thank you guys. I really enjoy you. And if somebody could help me, like I said, with the platinum, I'd like to join that. I'd like to get involved in swing trading, and obviously need to get admitted to the website. So I'm having trouble there. So if somebody can offer some assistance there, it'd be appreciated.
You're muted, Trent. You're still muted. There you go.
I wrote down your name, so I'll look you up and I'll reach out to you.
I appreciate it.
Yeah, no worries. Sorry about that.
No problem. Thanks, guys.
Thank you.
Okay, thank you. All right. Well, that was a highlight.
Right. Well, it's helpful. I mean, it's really helpful, and I would encourage anybody who's got like something that they're really into or have an insight into to be you're welcome to like share it and discuss it, because honestly, that's how you learn. I mean, my daughter was telling us she was in Palm Springs for a business trip just recently, and one of the people she was with, she made the comment. She says, "You speak so eloquently, and the words you use are amazing. Like, how did you learn that? Did your parents teach you that?" And she goes, "No, I just read a lot." And I think that honestly is how we learn, is that we read. We have people inject ideas. I mean, what you shared, Tim, is like totally valuable. And now I can go and sit at a dinner table and I can really put people to sleep with the stuff I now know, right? So I think that's what this is all about. That's what Best of US Investors is all about. And that's, I think that is our vision, is to help people educate, inspire, and give them a platform, a voice, to push ideas out and to, work through them, debate them. So I think it's cool. So
Tim, I'd like you to put together a list of semiconductor stocks that you need to own.
Absolutely. Yeah.
Wouldn't that be kind of cool
Yeah.
from an
Absolutely.
insider's view?
You bet.
Okay.
it's
you-
actually, this is interesting because you said something just a minute ago that makes me question Intel, because of the cost of foundries and because they released how much money they're losing on building out foundries. And I don't know if that's just the initial cost, that's, you're going to be underwater for 3 years after you build a factory, or how many a period of time. But is Intel's building out of foundries in the United States actually a waste of money and time, and it's not going to save Intel? That,
Yeah.
you know,
One, they're being somewhat subsidized by the US government, correct?
Yeah.
So it's
right.
not all out of their pocket. And two, I think we all agree, and Kerry's had many videos on this, is that we have to, keep our secret sauce here in the United States. And we've
Yeah.
done a pretty good job. I mean, we call it IP, intellectual property, right? And we've done a pretty good job holding on to that. But if we really, really want to take care of it, we've got to build it here in the US. We can't send it to China. And, so knowing that and the government backing it, well, I kind of think that, Intel, I don't know how long it's going to take. I still think it's probably a good buy and a good stock to own. Who knows how long it's going to take? It may take a while, but I understand it's on the uptick and it's done pretty well this year already, hasn't it?
It's done well this year. It took a hit today, and I
Yeah.
bought some more. Because again, I'm one of the few here who remember Khrushchev beating his shoe on the table and say, "We are going to bury you. It's only a matter of time." I've stood in the bunkers in Cuba with the where the missiles were aimed at the United States. This is something we can't pass on. And it's, some people were said, well, you're never going to beat the price of Taiwan Semiconductor for a chip. That really doesn't matter.
Well, and if I could just interject something too. One thing we all have to remember when it comes to building semiconductors, and it's very, very important point here. This is not a labor intensive process. It's process intensive. So it really, you have to have the least amount of steps. You have to have the best process node, basically the cleanest room. And so having said that, we can compete with anybody if it's done right here in America, because it's not labor intensive. We're not building a board level product. We're building a very sophisticated semiconductor. It's quite different.
Do you think robotics will become more and more, will create more and more efficiencies and in the end eliminate the human element in a lot of cases? It could actually make Intel even more profitable, or whoever else builds one here. If you could run the place on what takes, let's say 1,000 people today, takes 100 through robotics, the advancement of robotics.
I think that's a great point and a great example too. I think that's the perfect example for robotics, because it's such a clean room environment. You can't afford mistakes. You can't afford sloppiness. It needs to be precise, and that's right up robotics alley. So I think Tesla is, kind of leading the charge there, and other companies as well. So I think that's a good point,
But-
Trent. I agree with that.
What is it? Bezos dropped 100 million into, was it Figure AI?
Yeah,
I think that is the name.
yeah.
Another robotics company. Interesting.
And
Yeah, it's sort of,
that sounds like Apple wants to get into it too. So, you know, there's it's not a matter of if, it's a matter of when, for sure.
yeah, yeah.
Huh.
Interesting. Wow.
Okay.
All right. Well, I think what, about 15 till.
Yeah.
Y'all have a great week. I'm gonna try to be better about hitting the support at Best of US Investors. Make sure I get back to you guys if you have questions. Tim, I will get you logged in the whole bit.
Thank you.
And
And
Yeah.
if any of you don't know,
Can I ask a question?
this
Yeah,
will be
yeah.
the first time that Alabama wins the national championship in basketball
don't they play tomorrow, right?
tomorrow and then Monday.
Oh, very confident,
Tonight
aren't we?
is Katie Clarkson. What? No. The girl, the
Katie
Iowa
Clarkson.
State.
Oh, Iowa State.
Did you see the picture in the Wall Street Journal? And she's wearing a UConn jersey. And the article says she begged to go to UConn and they turned her down. Now they're going to have to deal with her. Somebody wanted to ask a question.
Yeah, I wanted to ask a question. Do you know what's going on with Applied Digital? That stock is getting destroyed.
Yeah. They took out let me remember if I can play this back, an independent loan
Right.
by a major investor. What's going on with them is, David, to my interpretation, they are, when you see a picture of a data center, we have one up in Huntsville. It's owned by Meta. It's a huge building, enormous acres of building. Applied Digital look like storage centers, you know, where you take all the stuff out of your garage and put it in well, they're just long Butler looking buildings, and they're in North Dakota. And they're adjacent to each one of them is a wind farm. And so they have cheap power. And I think if under most circumstances, they would have been bankrupt now. But Jensen likes them. And Jensen has promised them GPUs. Now, I don't know if they get 1,800, I don't know what's the number is, GPUs. Who won't get them is Microsoft, Apple, Google, and Amazon, because they're waiting in line for these things. And this little company has them. And I think it's because Jensen just likes the guy. As I said, they had some problems getting infinity bands, which is comparable to a Ethernet cable in our world. They have gotten those. So people are stepping up and saying, I want a part of this. Back in December, the hedge funds, I did a video where I showed the numbers, bought enormous amounts of shares. That company is owned predominantly by hedge funds right now. I think they're a better risk than just about anything. Because as Tim is saying, there is a shortage of data centers. There just aren't enough. Would you agree, Tim?
Oh, there's no question. Yeah, if you just kind of follow the money right now, you'll see there's a build out going on.
Yeah. So
I'm not gonna panic at my $3 stock now that I bought at 6.
again, I think my new way or my thought on investing is if you're in an industry that is growing and is going to be the growth engine of our economy over the next 10 years, and you have a company that's run into some tough times because of some particular situations that you understand, well, that's the stock that's going to give you exponential growth. It's not going to be Apple. It's not going to be Microsoft. I mean, I look every day when I see Air Systems go down further. I say, I'm sorry, I've reached my allocation, and I have to stay to that allocation because that company has no debt. And it's like Tim says, they burn the wafers, and they have to be in a sterile environment. And it's not like a machine does it. And why do they have to burn them? Because if one of them ends up in a Tesla and it doesn't work for the autonomous automobile system, you're in some deep dirt. So no, I think we'll be okay.
I think you also have to take into account there is more upside potential than there is on downside. Granted, I'm like you, David, I own it at a higher price. But if you look at the long term and the evolution of where we're at, if this is the, you're on your side, the right side of the bell curve, or left side, whatever it is. Anyways, we're just starting this. But
Right.
with that said, we've also seen, hyperbolic upward trends in like SMCI, NVIDIA, and all these others. We've seen an enormous amount of leverage pumped into the system since 2020. At some point, that has to retract to some level. And the smaller guys are going to be they're going to take a bigger hit, or they're going to take the first hit because they're, first through the door in a sense. You're already seeing that SMCI, it's pulling back. I think everything related to AI, in a sense, is going to see that. The question is as we go through this phase of the cycle, will these companies survive? And of course, your NVIDIAs are going to survive. If you make a specialty product, you're going to survive, and that's why Applied Digital could fall into that category. They're a necessity item for the evolution of what we're seeing down the road.
Tim, a question I have that I have not been able to get answered. If I buy for my data center 1 million of SMCI's $35,000 computers, and I put them in, and I need more power in them, can I go in and replace the parts rather than buying the whole new computer?
It's a good question. It's a real good question. That might be a little outside my pay grade there.
Okay.
Yeah, I'm not sure about that, Kerry. I'm not a data center expert.
Yeah.
I know semiconductors very, very well. I don't know how that works. Supermicro, by the way, is in Silicon Valley. They had been a customer of ours. As you know, they've got a relationship with NVIDIA.
Right.
So yeah, but that's a good question. I don't know the answer to that.
Because it's like Trent and I were talking, I've got a $3,500 computer, and my memory can't keep up with what I'm doing.
Right.
And
Yeah.
I believe I can go buy a bigger chip for memory, and I don't have to go buy a whole new computer now.
Yeah, that's typically the
Getting
case.
it in.
And usually it's done through SSDs these days, right? Solid state drive, solid state memory, as opposed to, DRAMs or SRAMs like it used to be, or an SRAM card. It's usually done.
You are now talking above our head.
Yeah. It's a little stick. It's just a little solid state drive that they'll throw into their system to add more memory. So as opposed to inserting a whole new circuit board or tearing the computer apart. So it's become pretty easy to upgrade memory these days, no matter whether it's your laptop or some sophisticated system going to a data center.
Okay.
Now,
Just
of
go
course,
to
it's got to
Best
be
Buy.
compatible. It's got to be compatible with the NVIDIA chip and software. So I'm making it
Oh.
be a little more simpler than it probably is, to be honest with you.
Okay. All right.
But
Okay. well, this is-
if you're SMCI, would you create a product that you could exchange parts and pieces out of, or would you make it a one-off, one-off, so that you're forced to buy the next evolution
Yeah.
of that product? Of course you
Yeah,
would.
it's probably the latter. Exactly. Yeah.
Well,
Yeah.
that's an interesting subject that I was reading on ASML, and they sold 3 of their latest systems to Intel, and Taiwan Semiconductor didn't buy any, and the reason was they're so damn expensive. You got to produce so many wafers off of that machine before it's paid for. And so even though you want to upgrade to the next level machine, you can't do it and survive financially. So that's another reason why I think Intel will be ahead of Taiwan Semiconductor. And as Tim says, it's all from that point, it's all robots. Now, the other thing that I thought a little strange, I just read today, Samsung is making application to build a foundry in Arizona. And I think that might have something to do that Taiwan Semiconductor has kind of backed out of their position in Arizona. But again, if I'm the United States government, do I want a Korean or Taiwanese semiconductor manufacturer here in the United States, or do I want Intel? Maybe they're equal. I don't know.
I think it comes down to national security at this point in time, doesn't
That's
it?
true.
Bill? Yeah, I
We
mean,
don't want TikTok, do we?
no, it's a much deeper thought process of where we're building our chips. It's national security. It's that
Yeah.
high up. It's military. It's self-defense. It's national defense, I should say. So there's lots of reasons why we need a very sophisticated fab in the US.
Yeah.
Well, here's the other element that is in a way restricting the United States, and that is our education system. We do not teach children from kindergarten through high school into college to handle this evolution. And that's why in a lot of cases, China, from what I understand, does teach to that level. They are pushing that education level. I think that's another element of the United States of, if we're going to be a producer of this high level technology, we're almost forced to go robotics because there is such a limited human element that can actually think at that level. And until we change our education system, you're going to have a lot of people who are on, what's the thing they're always proposing about everybody gets a standard of living paycheck or something, because we're not educating to this level. I mean, we should be pushing this kind of thinking, this kind of education, because we'll quickly get left behind. I mean, that's a ball and chain that I think we've experienced over the last 20, 30 years, is we're not teaching at that level, to perform at that level.
I think it goes deeper than that, Trent.
What's that? How is that?
Well, it starts at 5:15 every night in our house, and it goes till 9 o'clock. My wife arguing with my grandsons that they have to get off their backside and achieve at a higher level, or they're not going to go anywhere. And this is ongoing, and it goes on all weekend. I think I don't think you're allowed to do that in China. By that I mean lay around on your backside and hope that the world's going to take care of you.
Yeah.
And of course, because we have these boys, one's 14 and one's 15, we are, aware of other boys 14 and 15, and it seems to be kind of a trend in the school. Of course, there's always the A students. My granddaughter's one of them, but the boys are not. They expect somebody else is going to be accountable for their problems and their lack of effort. They're not going to be held accountable. So yeah, I think it's a little bit, I think that's where it starts.
Yeah.
It's not only the school system, and the school system as well seems to have now a set of rules which are not necessarily designed to graduate A quality students with A's, if you know what I mean. It's more like get them through one way or another. We're finding that out as well.
This week is the busiest spring break week for our area in Florida. And Ginger asked me the other day, we were driving, I live on a stretch called Highway 30A in Florida. It's pretty popular. It's 18 miles long. If you've ever seen the Truman Show, it was shot in a little town called Seaside on that stretch. Well, we were driving down the road around 5 o'clock down 30A, and Ginger looks at me and says, "Do you need a drink?" And I'm like, "I think I do." I said, "I cannot believe the behavior of this generation. I cannot believe what they're doing and how they're going about life." And that's where I sort of have this breakdown in the education system, but also in the parenting system. And I think, Zeke, you're right. I think it does start at home. And I don't think we're, as Americans, preparing our children for what is to come. And you know, it's like my daughter's boyfriend, he's graduating with a degree in HR in May from college. And he told us about 2-3 months ago, he was like, "I don't know what the hell I'm going to do with this." And he says, "I think I'm going to go into the Army and get into their cybersecurity division." He said, "I can sign up for 4 years. I can get high classified certifications. I have to commit 4 years, and I'll walk out with a degree or a skill set that will pay me, you know, in today's numbers, starting about $150,000+. And he is not the only one who's graduating from college and in other, you know, education. We're just not pushing that. This is the world where the world is going. You need to be aware, and you need to know your P's, you know, mind your P's and Q's as well. But I think it's just my concern about robotics and AI and all this is that it eliminates the purpose of having to learn, you know, having to learn how do you program an Excel spreadsheet when I can type it in ChatGPT 4 and have it tell me how to do it. It's taking away that. It's in a way there's just there's a push and pull with it with me, but I don't know. Everything fixes itself.
On the same subject, but on the brighter side of it. I got a phone call from Brian. You remember Brian is from Nashville. And he said, my daughter is in Middle Tennessee State College, and she's in an entrepreneurial program, and she needs to interview an entrepreneur. I told her to call you. And so I said, "That's fine. I'll be happy to." Spend an hour.
Call you.
Yeah, call me. So I spent an hour on the phone with her. And the essence of what I told her was, first of all, you do not need to be an entrepreneur when you graduate from college. I only know one person that succeeded at doing that, and that was Trent's daughter, because you have to manage yourself. And you're not in a position to manage yourself when you graduate from college. So I said to her, "What is it you like to do?" She says, "I'm athletic. I enjoy athletics." I said, "What are your two favorite companies?" Nike and Puma. "Oh," I said, "so you like running shoes?" She said, "Yeah, that's really what I like." I said, "What are you, a junior or sophomore?" "I'm a sophomore." "Okay, do you know who Phil Knight is?" "No." "Well, he's the CEO of Nike." "I want you to look him up. I want you to find out everything you can about him. I want you to know his wife's name, his children's name, where he went to school, everything you can. And then I want you to go down the executive board and learn everything about every one of those people. And then I want you to write them. and say, I am a sophomore at Middle Tennessee State. My favorite company is Nike. And my ambition in 2 years when I graduate is to come to work for Nike. What do you want me to do such that you will open the door and spread your arms when I show up? I said, if you will do that, if you will take the courage, because I will tell you, they will not get a letter from anybody else because they're afraid to do it. They're afraid to make themselves vulnerable. If you will do that, and if you will carry that attitude for the rest of your life, you don't have a damn thing to worry about.
True.
She called
Yeah,
me
it's-
up and said, I turned my report in and I got a 93. I think that's an A.
Yeah,
Yeah.
I
So-
think so. Yeah.
All these kids need guidance. They need
do.
guidance. They need somebody that they can look at and say, that dumb shit did it. So I can do it. They need guidance. And then they need to be challenged. You know, why haven't you written Phil Knight? And as I told her, if you can't write a letter, just go to ChatGPT. Oh, we're not allowed to use that here at Tennessee, Middle Tennessee. I said, forget that. We weren't allowed to use calculators when I was in college. They'll change that. And if you want to know something even more stupid, when I was dating my wife, it was against the law for her to take a birth control pill. So we had our whole life at risk every time I slipped that rubber on.
Yeah.
Does that make sense?
I'll cut that piece out of this.
Okay.
Oh boy.
Let's have a good
Wow.
weekend.
Y'all take care.
Bye-bye.
See you later.
That was my closing act.
There you go. That was pretty good.